time. We're going towards a new month. So a new month is going to be a beginning of the month trap, and we're going to see that. We know that all the way through US 30 to SPX, these pairs are twins. They're not cousins, they're not uncles. These are, we could probably say brother and sister. Yeah, brother sisters. They're twins. They are running similarly. These market makers are doing that on purpose. Okay, and we're going to use that to our advantage. A lot of traders, they say that, or well, I have heard, since they run so close, well together, well, maybe they'll just stick on to one pair, maybe two. But if you pay attention to the course material on fractional disparity, we know that we will use all those pairs and pick the pair that looks pretty, pick the pair that looks very accurate and resonates to us. Okay, so we're not just going to focus on US 30 and be mad that, we didn't find a setup for that current day. Well, if you didn't find a setup on that one pair, I'm pretty sure there's going to be a setup on the German 30 or the Francis 40 that resonates to you. Even if it doesn't resonate to you, that second leg's going to paint. Okay, so since we're on these charts and since we have a new month to begin, we know that the box trade, where the market makers are going to manipulate the support and resistance traders, or even the breakout traders, I should say, they're going to manipulate the breakout traders, where they're going to fake a breakout and come back in within the range. Fake a breakout, come back within the range, issue that second leg to give them some type of chance, some type of hope, and then go on with a perceiving trend. Okay, so for the box trade method, since we're in the middle of this box, we're not really going to pay attention to this box because the manipulation or the trap pattern was already issued. So this is what we're going to be doing when we look on our higher time frames for the beginning of the month. Same thing that you will do on the lower time frames on a 15-minute or 1 hour. All right, I'm pretty sure that this move right here, or this price action, you're pretty much familiar with, where they're just fading, they're hitting lows, reeling in, coming in, and some people say, well, this could be like a triangle pattern or whatever. We don't focus on that. We're, as market maker traders, we're looking to trade at the extremes. Okay, so this type of structure is not really candy for me. I want to see this pattern. Okay, I see this pattern, I see that consolidation. This is giving me enough confidence that we might be buying for the beginning of the month, even though that the monthly trend, this is a monthly order box, is down. Now this, bam, bullseye, whatever this pair is, EU 50, is a pair that we're going to focus on, or I'm going to be focusing on. Okay, because why? We're at the bottom of the box. We have consolidation. We have a W pattern breakout. The market maker needed more orders. Okay, so this is a triple bottom. Okay, so that's very perfect. I want to see that. So let's see if we can find something else like that. This is nice. Okay, NAS 100. All right, that's nice. We can see with the previous 3 months, now we have 1, 2, 3. The powers of threes. Market should reverse in 3. And so since we have 3 levels or drop of week of monthly boxes, I'm pretty sure that this pair is giving me enough confidence to buy this pair, right? Have enough confidence in the setup paying out for me. So let's go to UK 100. UK 100 is looking kind of funky. But if we zoom in, we can see that W formation moved the scare traders out. Okay, in this previous week, and they continued on with the bullish reversal, and now we have consolidation. This is a W. We look on the higher time frame, the line chart. This is a W. Okay, so that was nice. But like I said, with fractional disparity, we want to focus on pairs that's showing the perfect clean setups, textbook setups. So let's go to AUS. AUS gave out in a dramatic, bigger structure W. This first leg it took 1 week to make the first leg. Second leg took another week. So again, we're sticking on a monthly time frame. We're just evaluating support and resistance, trying to find a setup, and that's what we're doing. Okay, I don't see anything on this pair, SPX. Okay, so I love what I see on SPX. Nice. So SPX, NAS 100, and EU 50. It's going to give us a nice juicy buy. Okay, don't bum rush in on this buy because we're going to look for a stop, hunt, low, rise. We're going to have enough opportunities for this upcoming month to place orders. All right, especially if we're just shooting for one trade a week. So let's go back to US 30. Okay, see, we know that the overall trend is down. All right, so let's go on our 15-minute charts and see what was the price action for Friday. Right off the bat, we look at our Asian range. Okay, well, let's just I would say let's go to Monday, but let's just look on Friday real quick. We wake up at 3. From now on, I'm waking up at 1, and I have my trade hours as a normal work shift as my old job. I just quit my job, made enough money to invest, made enough money to withstand me for a couple of months if anything does happen, which is like 2 months. So I will be applying my work shift from 7 to 8 hours. So 1 a.m. to 7 a.m. to 7 to 8 a.m. is like right around here. So I have all this to evaluate on the market. That's why I was on the 1 hour charts before I made that decision to quit my job. And that's that. So previously I would wake up at 3 and stay up to 3:30, half hour, just so I could see that second leg. And the reason why we want to see that second leg is because this trade is called the Brinks trade. The Brinks trade gives you enough confidence. It's a guarantee to see that manipulation, the rejection of the double top or the first leg, and you automatically know at 3:30 when that happens, when the market maker does that transition changeover, you automatically know that you have a perfect setup for 50 pips. If you look here from this ideal entry, advanced users or Steve himself will probably enter around over here, but we want to make sure that this candle closed, and we see that this candle gave out another retest, a fourth retest to this low. Okay, that was nice. So right off the bat, we're already up 60 pips. We're up 30. So you can see that this is we have pretty much 2,000 2,777 pips. That's not that. You just add 2 pips or 2 digits to this pair. We're at 27 pips. So we go up to 50 pips. That's 59, 60 pips. Okay, that's why you have to be careful with your risk management and your entries, because all the way up here, that's already what, 265 pips. Come on now, you made more than what you were expecting just for 50 pips. Okay, and like I said, since I'm trading 7 hours, I would have cashed out at 50 pips, like around here. Okay, but if I'm trading US 30, I understand that this pair has a little bit more run into it. Maybe I will hold my position in and exit out, and I'm good for the day. Okay, so that's what you want to do, for that instance. But like I said, for the beginning of the week, some people don't trade Mondays. Some people do trade Mondays when you are well seasoned in the strategy. You'll understand that Mondays is day 0. So when we do have that Asia range, we automatically know that we could just say right here, this is our Asia box, and we have that breakout. That's a stop hunt. Yes, the trend is up, but we know that once price breaks the initial high of Asia, we know that we have about 25 to 50 pips to be considered as a stop hunt. 25 to 50 pips. Even though this is a bigger pair, we see that it's 100 pips, and the market has gave out an ugly setup. The reason why I say this is an ugly setup because the trend is up. We see that we have a W down here, so we missed our trap pattern, for the buy. So we can just say this is a reversal. We just know that once price breaks the high, we know that we're going to potentially get a type 1 stop hunt. Okay, and the New York reversal came, or probably in a New York changeover came true. We have some type of quarter wood pattern over here, and market proceeded to go down into the new day. So we could say our Asia range. This is our box. Let me see how many candles are there. So this is about 30 candles. So we go about 30 candles on here. Yeah. So this is our Asia box, our Asia high. Market broke out, so we are automatically expecting a type 1 setup. I hope traders didn't get caught up on this railroad track because we're looking for second leg formations. Our second leg formation came around here, but again, this is pretty much level 3. Yeah, this is level 3. Bigger trapping is going on. So I'm not too surprised. So I'm not too surprised to see that that price market makers put a 4th leg up here. Come on now, greedy suckers. And this was in New York anyway. So you have about once you identify this, you have to give the market makers about an hour, a 2 hour, up to 2 hour time horizon for them to set up the structure. And if you do get stopped out, understand that they will go up 25 to 50 pips higher. In our case, they went about 200 pips higher to stop hunt the traders that got the trade right or pending orders manipulation. Okay, so he put a 4th leg up there. Very greedy. That was very wrong for them to do that. But hey, it's the business. And the market dropped about 1,000 pips all in one day on a Tuesday. So yeah, so peak formation level 1, and then we could say this is level 2, but this is day 3, so we already have a reversal. So that's that. So let's go to our other pair. And again, with fractional disparity, since this was ugly, let's look on our other pairs to see that we could find just a regular double top, and you wouldn't got stopped out. If you did not trade US there, you would not have got stopped out so aggressively like they did. Look at that half a Batman pattern. You wouldn't got stopped out so aggressively. And this is the box trade when they're working the breakout traders of last week's high. Look at that. And you see that this pattern is holding very well. So the manipulation for the US 30 was very greedy, very ugly. And oh yeah, look at that. And like I said, this is the box trade. So you have a multi-session or multi-daily M. Go back on the box trade video, and you'll see why this is powerful. Because they're working the support and resistance, the perceived support and resistance. They're working the breakout traders. And I'm just showing you that on day 2, look at that clear breakout. So 30 candles. So let's see. 30 candles was like right here. I'm sorry. Yeah, 30 candles. They broke out. So you're just waiting for price to settle, right? You're waiting for price to consolidate. And look at that stop hunt. That was a New York session. So that would have been, this trade would have been a scratch for me. Because I probably wouldn't went to bed. But even though I had 7 hours, I'm pretty sure I probably would have stayed up. But like I said, there was different setups for me to find a trade that resonates to me. Okay, so look at that. Look at that. So SPX. So SPX mirrored the price action with US 30. Okay. So let's head over to day 3, Wednesday. Was an inside day, consolidation day. All right, let's see if we can find a Brinks trade or some type of M or W pattern to go along with the trend on the other pairs. So we started our Asian range. We know about, the breakup, but they immediately pulled back. Okay. 7 hours in, we have our second leg formation. I want to sell the highs. Yeah, I probably can buy that, but how many pips is that? It's about 100. Okay, that's nice. So that's the benefit of trading these pairs versus with currency pairs. You're going to be able to get 100 and 150 pips on these small movements. Very small. And then when it comes with the trend move, you're netting. Whoa, hold on. Let me see. So we just add additional digit. Just one digit. About 3,000 pips. Literally 3,000 pips on that. But yeah, so wake up at 1. I want to see my second leg structure. I'm not selling this, even though this is okay, by the time I'm looking at this is a head and shoulders pattern, but I'm not at the high of the day. I get stopped out. I'm not looking for those type of trades. So New York session played out as the continuation. London just acted as a continuation for the consolidation. Okay. And that's fine. That is fine. So this is kind of a head and shoulders pattern. This is probably like the only pair that paid out for us with the head and shoulders pattern because we didn't get stopped out. The pair moved on with its trend. Okay. Ooh, now now we're talking. We see we have our consolidation, manipulation. It's kind of a small M, but then we got their second leg right around here. Look at that. Market dropped what? How many pips? So just add an additional. No, I think we add 2 digits. Yeah, 2 digits. Market dropped about 200 pips. Oh yeah, big money. Come on now. 200 pips. Let's look on US 30. All right, and that's that. And I mean, you don't want to put too much emphasis on, on this market structure on your analysis because we already did our higher time frame analysis. We're just doing back testing, see what we could have did on the 15-minute charts, because that you have the box trade. So yeah, so the box trade again, we have our weekly box trade, and then with the type 1, type 2, type 3s, it's the same thing, but we just getting the box trade method. This is the box trade method right there of the support and the perceived breakout traders, of the support and resistance. It's just on a lower time frame. So at the beginning of the month, you have an opportunity to have a swing position. Okay, that's trade 1. Trade 2 is our weekly support and resistance trap. That's trade 2 to add on to our initial position. I'm pretty sure even though we're trending on a long time frame, we probably wouldn't close our short positions, but I'm pretty sure that we would have closed out some short positions around this area. But that's trade 1 on a monthly time frame, trade 2 on the weekly time frame, trade 3 on the intraday time frame. Okay, that's that. This is a type 2 W buy. Can I find a type 3 W buy? I think that was on the pair. No, this is a type 2 M sell. But a type 3 M will happen. Just picture this structure happening in the middle. And our type 1s. Let me see if we can find a type 1 real quick. Type 1. Where are you? Where are you? already identified type 1. So like I said, type 1, 30 candles in, about 25. This is our type 1 pattern. Okay, we want to see that and get good money. So again, let's focus our attentions on, what was it, on Francis 40. Let me see. No, Francis 40, EU 50, and SPX 500 for the big buys. Okay, we want to focus on that. So again, Francis 40, EU 50, SPX 500 is going to be giving us some type of buying climaxes, but nevertheless the trend, overall trend, is down. You know, we can't trade both ways. I'm heading on to my third trade, so I'm pretty, I'm happy about that. I'm just gonna be trucking along. I might just add the stop, not the stop, but the position sizes down here. I know this is 0.7 or 0.8. I might just add that because you're not just trading 0.1s. I just know that you start off with 0.1 in your second trade. You do what you gotta do. But yeah, guys, thank you for everything. Thank you for subscribing and showing support in that way. I do appreciate it. If you have any questions, let me know. Take care. May this month be with you. Stay blessed.